all these nuances that people get hung up on. They want a simple, singular thought process and ignore all of the other factors. That's not how it works. Welcome to How to Retire on Time, a show that answers your retirement questions. We're here to move past that oversimplified advice you've heard hundreds of times. Instead, we're going to dive into that nitty-gritty. So as always, text your questions to 913-363-1234 anytime during the week, and we'll feature them on the show. Just remember, not financial advice. This is an educational show. What do we got today?
Hey, Mike, which should be done first, Social Security optimization or tax minimization planning? Chicken or egg here? Or
No, I was trying to think of a Price is Right quote.
Like Bob Barker Price is Right or Drew Carey Price is Right?
Either.
Okay.
So the answer is taxes first.
Okay. Tell us why.
And the reason is you don't want to jump over dimes to pick up pennies.
Okay.
So if you look at Social Security as an isolated optimization strategy, as in how can I get the most out of Social Security, you may significantly hurt or lower the amount of money you're getting from other resources.
Okay.
So for example, if you have a significant amount of your assets in pre-tax accounts, okay?
401k, IRA.
IRA, yep.
Yeah.
Anything that if you take it out, you're going to pay taxes, okay? And you're going to, based on projections, run into issues with your RMD, required minimum distribution. Happens all the time. People run into the problems. And let's say you know that's coming, but you still want to get the most out of Social Security, so you're going to file at 62 or 63 years old.
Okay, so that's filing early.
Early. You're
right?
filing
Yeah.
it early. That's a part of your adjusted gross income. Let's say 85% of Social Security is a part of your adjusted gross income at that point.
Okay.
All of that money is now taking up room where you could more strategically take money out of your IRA, either as income or as an IRA to Roth conversion, because RMDs are only as difficult or only as, tricky as the amount of money that's still in the IRA. So if you delayed Social Security, let's say a couple of years, that opens up more room to either spend or convert your IRA assets to Roth or just spend it.
Oh, okay.
Which then allows you to lower the amount, which then would allow your RMDs to potentially be a part of your income. That was a lot. Let's break down each step, okay?
Okay, yeah.
Let's say that your taxable income each year is $150,000.
All right.
And for easy math, let's say your combined Social Security, if you filed at 62 in a month, is $50,000. So $150,000 is your total target taxable adjusted gross income. Okay, that's all of your taxes you're going to take out, and $50,000 of that is now your Social Security benefit for the household, 2 people.
All right.
That means you've got $100,000 that's leaving your IRA each year when you're 62, 63, or 64 years old, 65, and so on and so forth. Whereas you could delay your Social Security, that $50,000, and delay it till 67 or 70 years old, okay? And now you're taking out $150,000 from your IRA. So you're now getting more out at a faster rate. You're paying the same taxes, but you're getting more out at a faster rate. So that alleviates the burden so that when RMDs start, maybe your RMD is, and I'm just throwing out a number, let's say your RMD, you can do enough IRA to Roth conversions so that your IRA balance lowers enough that your RMD is, let's say, $30,000.
Okay.
Well, guess what your standard deduction is? $30,000. So now you've got a higher Social Security benefit that's being taxed efficiently because only up to 85% is subject to tax. Plus your RMD, all you need to take out from your IRAs at that point is your standard deduction. So that's basically tax-free, and then the rest of your income comes from Roth.
I see. So we've taken out more. We've done Roth conversions early on instead of later.
Mm-hmm.
Did I get that right?
Yeah.
Okay.
So there are many, many moving parts when it comes to your tax planning. The last thing you want to do is to arbitrarily give yourself something that's going to give you resistance to your goals, something that's going to get in the way, something that's going to push up your tax rates. Because tax planning really, in my opinion, is not about just moving funds over as quickly as you can. It's not even about tax brackets. Everyone, especially all the CPAs who just heard that, gasped. It's not about tax brackets. That's what we're told. That's the indoctrination. We've been manipulated to think it's all about tax brackets. Well, why?
Everyone wants to move down to a lower one. Is that the supposed
It's like, oh,
goal?
let's this dollar, let's maximize this tax bracket. Why not look at it from an effective tax rate, the total amount of taxes you've paid versus the total taxable events that have occurred? That seems more appropriate to me, because what if you're in the middle of a tax bracket, but your modified adjusted gross income pushes a certain limit that then helps your IRMA or keep your Medicare charges under a certain level here? What if your modified, let's see, 150,000 modified adjusted gross income, you get an extra $6,000. Oh, but that's not a tax bracket. It's about 200,000 or so for the 22% tax bracket, or it's like all these nuances that people get hung up on. They want a simple, singular thought process and ignore all of the other factors. That's not how it works. And here's the reality. If you go a couple of dollars into a new tax bracket, it doesn't really change your overall tax situation that much. You don't want to, I don't know, what's an expression? You're very articulate with expressions, where you're looking at the micro data point and you forget the entire picture.
Yes. I don't know. Maybe you're looking beyond the mark, or you can't see the forest for the trees. I don't know.
Yeah. So, I feel like there's a camel expression.
Oh.
I don't know. Anyway.
Straw that broke the camel's back?
No, that's a good one.
A rich man can't get into, let's see, I don't know. I'm going through, biblical ones.
You can't go through the needle.
Yeah.
There's something there. Gosh, it's embarrassing. I can't think of it.
Yeah. A camel has a better chance getting through the eye of a needle than a rich man in heaven. I don't know, something like that. But
okay, yeah.
We've exhausted all of our idioms and sayings here.
But the point being is, don't get hung up on tax brackets. Look at your effective tax rate.
Mm-hmm.
And here's my point. Do you do your tax withholdings in January saying, okay, well, this first month, every dollar I spend, only 10% of this is going to federal taxes. And then in February, you're going, well, this is 12%. So, 12%, a little bit more. And then by the end of the year, you're going, well, this is 22%. So that's not how anyone does their taxes. I don't know a single person that actually counts that way. I'm sure someone there exists.
Yeah.
There's someone out there for everything.
Yeah.
But the point being is, that's not how you do your taxes. You're focused on your effective tax rate. How much do you have to pay? And so if you go a couple of dollars over, it might not be the end of the world. It really might not be the end of the world. People are manipulated by this next dollar tax situation, which I get, but it's just the next tax dollar.
Yeah, everything under that dollar stays in that bracket, right, in that bucket. It doesn't. Your whole thing doesn't get
progressive.
Yeah, it's progressive. Your whole income isn't in the 22% bracket, right? You graduate up. Do I have that right? Yeah. So we shouldn't lose sight of that, is what you're saying.
Yeah. If you go $10,000 into the 24% tax bracket, or in the 30 whatever it is in the future tax bracket, it's not the end of the world.
Mm-hmm.
But what could be the end of the world, not literally, but for argument's sake.
Euphemistically.
Yeah. They got to come up with a better expression than that. What could be a problem in the future is if your RMDs are pushing you into a higher tax bracket than the income you already want, and taxes were to have gone, sound like a Shakespeare thing, were to have gone hitherto.
Yeah, it does.
If they went up in the future.
Yeah.
So we don't know what future tax rates are in the future. There's currently no sunset to current tax brackets, but the tax code is written in pencil. So mindfully, at a effective tax rate that you're comfortable with, doing IRA to Roth conversions, figuring out the long-term tax strategy, because taxes will likely be your largest expense in retirement. Healthcare is the next. Then you can start to see, how does my Social Security fit in for my lifestyle and legacy goals? And maybe filing early makes sense. Maybe filing later makes sense. Maybe having one spouse file earlier and one spouse filing later for spousal survivorship makes sense.
Mm.
But the point is, you start with your biggest problems first. And if you think that Social Security benefits are going away, let me give you your prescription,
All right.
okay?
Yeah.
Not a doctor. Whatever news source you're watching, watch the opposite news source. I've actually told many clients this. If you're left-leaning, watch left and right news sources. If you're right-leaning, watch right and left news sources. I'm not trying to convert you to the other side of the aisle.
Right.
I want you to see how much sales there is in the news. The news wins when they give you fear, when they keep you compelled to keep watching because you're scared to death.
Right.
Clickbait isn't really clickbait anymore. It's now rage bait. They want you to get upset. They want you to get angry. And on a biological level, by the way, when they get you angry, you know what this does? I don't think this is a bit of a rabbit hole.
All right, let's go down it.
When you get angry or in a flooded state, fight, flight, freeze, or faint. Oh, it's the crazy uncle or aunt at Thanksgiving that no one wants to hear that's very political, and they're just rage all over, whatever. They're upset all the time, and they have something to complain about. They're constantly on Facebook just complaining about stuff. What's really going on is there could be an addiction, not like its traditional definition, but this need to self-medicate, get a little psychological here, based on norepinephrine or adrenaline, and cortisol are the two big drugs that when we feel pain, our body produces it, and you can have an addictive-like behavior to it.
Mm.
So if the news, if other media outlets can get you angry, you're going to experience these drugs that your body produces, which then gets you more in there. More watch it more, stay in tune longer, click on more of their articles. There's a reason why they do it, in my opinion. That's my get out of jail free card.
Yeah.
But the point being is, if you're very fearful of the markets, of trade wars, of inflation, of politics, of whatever it is, consider for a moment that maybe that's not the full picture and you're being sold a story on either side of the aisle, and then on either side of the aisle, and then that allows you to maybe see a little bit more clearly, maybe see a little bit more objectively. Because when everyone says, oh, Social Security is going bankrupt, there's usually a political angle or a marketing angle to that statement. Social Security, 80+% of it is paid for by last year's taxes.
Yeah.
So maybe there's a slight reduction. Maybe. There are so many ways, if you read the laws and how they could fix Social Security, there are many ways they can save it. It's just no politician yet has wanted to really do that because it would be difficult politically speaking. Is it going away? Well, the largest voting bloc is the retiree.
Yeah.
It's not going away.
I wouldn't think so.
I don't think it's going away. But the point being is, don't file early out of fear. Look at the taxes, your bigger potential issue. Then look at your healthcare, the second biggest potential issue. And then see how Social Security supports your overall objectives. At the end of the day, if I had to kind of summarize this, the question is, how do you get the most out of your money? And that requires a more comprehensive position with more strategies looked at and watching how they all connect and work together so that you're able to enjoy your lifestyle and legacy goals so you can accomplish the purpose of the money. Your entire life you worked for something. Do you want to be a good steward over that and get the most out of it? Or do you want to just, put it in cash, live off the dividends because it's safe? That's not a healthy relationship.
No.
That's not a healthy relationship with money. So what is right for you? That's a very important conversation, but it does require a more comprehensive discussion.